Okay, the first point that I want to talk about is about how to get medical coverage for life. Now, when it comes to medical coverage for life, I think there is no rocket science. If you get a medical card as of today, which normally medical card as of today, it will at least cover you until 80 years old, and most will be until 100 years old. I think 100 years old might be a bit of an overkill, but I would say that minimum 80 years old, you should be fine. Now, if you have not reviewed your medical card or policy for the past, let's say 5 years, it's likely that your medical coverage is only like the old medical card is only like about 70 years old only of coverage. If it's like more than 3 or 4 or 5 years old. So that means after 70 years old, you don't have coverage. So I think it's better if you look at that if your medical card is a bit old. That's what I see. Now, the point I want to get today is about a medical card that can be structured or can be sold as a standalone medical card and as a rider. Now, when we say standalone, it's really like a standalone. It's like what we call also as a term medical, yeah. So term medical card, yes, a standalone. Example, if you are employed by a company, then the company you have a medical coverage, that is a term standalone. But in company it's group term, but the concept is the same. So it's a term insurance, right? You don't pay, you don't get coverage. As simple as that.
Yeah.
And of course it's cheap, and for a reason as well, we will actually cover. And the second thing is about rider, right? When you talk about rider, what you think about rider? Rider is investment-linked policy already, right?
Yeah.
So, yeah. So when it comes about rider, so it is basically an investment-linked policy, and you have this additional medical card that is attached to this investment-linked policy. Now, why I want to use this so-called peribahasa to present it is because this is about the cost that we pay, right? The cost, the cost of medical card. And a medical card is always like on an increasing basis. It's never getting cheaper, it's only getting more expensive. But I can say that if you ask me about what's the big difference between standalone and a standalone medical card and a medical card billed as a rider in an investment-linked policy. So an investment-linked policy, normally it works like you pay more, right? It costs you about like minimum 1,200 or so of annual premium a year. So you pay more. Let's say, okay, the same medical card, it can be sold. The same medical card can be sold in both so-called ways. So let's say if you are 30 years old, the cost of that medical card is, let's say, for 30 years old, it's 500 a month. So this 500 a month.
Okay.
Sorry? Yeah.
A year or a month?
Oh, sorry. A year. A year.
Okay. Okay.
Yeah.
500 is a little bit expensive.
So 500 a year. So that is the
okay.
500 a month is a lot. Yeah.
Yeah.
Thanks for that. 500 a year, right? When you say 500 a year, that is the cost of the insurance company to sell you this medical card and to insure you. Now, if this medical card, it can be structured in both ways, right? If you buy this as a standalone, which means that you are only paying, let's say for simplicity's sake, you are just paying 500 a year. Then you say it's cheap, 500 a year. But as your age increase, as our age increase, this cost will actually increase. Decrease. Maybe next year it's 600 a year. When you are 40 years old, maybe it's 1,000 a year. So you pay for what you are getting. The cost increase also pay more and more and more. And a lot of people cannot accept that. Or maybe when they buy this, their advisor or agent, they tell them that, hey, this is cheap, right? And then after that, within the next 5 years, normally the cost of this medical card is age-banded one. Every 5 years, then there is one rate. The next 5 years, there's another rate that you need to pay. They say, hey, how come it keep on increasing? Some people will shock, right? But that is how it is structured. If you stand alone, you must be prepared for that. And there is normally a scale that you say that between 41 to 45, what is the rate? Between 46 to 50, what is the rate? So you know that already. But insurance company has a clause to say that they can revise it anytime depending on the situation. So you cannot complain. It's in the contract already. So standalone works like this. You pay for what is the actual cost to insure you at your age, right? So like I said, it's the senang-senang dahulu bersakit-sakit kemudian. Because you very short when you're young, you buy this, you pay less. As you get older, you must pay the rate that reflects your age at that age, even though you are healthy, because that is how it's structured. So the second thing is about rider. If you have a rider in the investment policy now, because it's not because of medical card, it's because of the investment policy, the nature of the investment policy. Normally, if you have a minimum annual premium of 1,002, if you add in a medical card, I doubt you can has an annual premium of 1,002. Maybe you need to pay 2,000, let's say, for the same medical card if it's sold as a rider, right? As a in the investment policy. But still, if it's the same product, the cost of this medical card as a rider is only 500 ma. So where does this 1,005 go? So for simplicity's sake, let's say the rest of the money that is not used to cover the 500 ringgit a year of medical card cost, the 1,005 would be channeled towards a so-called unit trust fund that is managed by the insurance company. So, and that is why you can't go lower than that. It's the way investment policy are designed. So that's why you're actually paying more, like 2,000 constant, but it will not increase. I mean, internally, the 500 medical, the cost of the medical card will increase, but you don't feel the increase because you're already paying 2,000. So it say that you are paying like 2,000, maybe at 50 years old, right? Maybe at 50 years old, the cost of this medical card is already 2,005, let's say. But you probably are not paying 2,005 a year. You are still paying 2,000 a year because the extra 500, the cost of the medical card is already covered by the extra premium that you have paid in the earlier years. So I don't really. I mean, because we are on a webinar. So if you have a whiteboard, then I guess we can actually explain this better. But I think I try my best to actually explain that is the difference when it comes to standalone and rider. Now, then you say that a lot of people say, okay, then if standalone is cheap, so I pay cheap first, expensive one, then I belakang kira, right? I don't care, right? But bear in mind that there is one when it comes to pro and cons of standalone medical and a medical card as a rider. Now, as a standalone medical card, there is a higher risk of lapse. Now, what it means, like, because
at my website, you'll find online financial seminars, which is I call webinars. I do it regularly, and also a lot of online investment and financial courses, which is conducted solely online. So I'll be waiting for you at my website at kclao.com. I wish you have a great day. Hope to see you soon. Bye bye.